Good morning, friends. Good morning, friends. Welcome back to the 59th episode of Pre-Market Sit-Rep. We will analyze Nifty and Bank Nifty futures as usual, as we do daily. And one subscriber suggested that I do these videos in the evenings. That's pretty fine, which is good. I've been thinking about it because mornings become too stressful because we prepare and then prepare for the market, as well as there are many other things which are kind of stressing my mornings. The reason why I have been doing in the morning is our mind is always rebooted in the morning. So I analyze, I study, I do everything in the mornings. Okay, I wake up at 5, read a couple of books, kind of exercise, walk, or do something, and then look at the market in the morning, because by then the information is digested. Global markets have worked out. So basically, when we are analyzing in the evening, what happens is you have incomplete information. You do not know what is happening in the US market. Whether we like it or not, there will be varying impact on our markets because of the US markets. For example, yesterday's event, like FOMC event, will have minimal impact. And you see that when I say these events, you see that this last move is unexpected totally. No one would have figured out why this happened. Ideally, yesterday our setup was, as I mentioned in the channel, our setup was we went up from here, we should have closed it somewhere here. However, large traders, they adjust books ahead of any event. So this down move was basically because of that. Because on intraday charts, you would have seen that there is RSI divergence. That is the reason why we went up. However, because of the event, whether we like it or not, these things impact our markets. That is the reason why I do these videos in the mornings. However, for a week, let's see how it goes in the evenings. We'll do something like a preparatory video so that you have enough time to think to the next day morning. Because if I'm doing these videos 1 hour before, you may not have the processing time before the market opens. It's a fair point, and let's do it from next week. With that in mind, let's get into Nifty and Bank Nifty analysis. Let's look at Nifty first. We'll look at the market chart. Let me zoom out so that you have a better view. And yesterday we opened higher with a lot of bullishness. However, since opening, I'll show you Bank Nifty charts in a bit. Right from the open, there was a open test drive. Open test drive. This is called open test drive in market profile. The market went up suddenly. It saw some kind of action at 18,360, which turned the market down. And since then, the market has been going down. However, I was not bearish. So basically, for someone who sees open and then close, for him the market has fallen. But in between, what happens is also very important. If you are an intraday trader, if you are a positional trader, or if you are an investor, what matters is your open and close. Okay, so that's why we should not get biased with the direction if you are trading intraday. For us, the market went down, then went up, and then went down. Okay, so this kind of move should be, this is called volatility. So basically, an intraday trader should trade volatility. He should not trade direction. Let me tell you, an intraday trader, mark these words, an intraday trader should trade volatility. He should not trade direction. Direction is traded when you are in a cash segment stock or when you are doing swing trading. Okay, so if you are an intraday trader, you better understand volatility first than direction. Because if you understand volatility, you could have traded this move, you could have traded this move, or you could have traded this move. So there are 3 opportunities, 1, 2, and 3. You could have picked one, made money, and then get out. Okay, so and also greed should not force you to make all the three trades. Okay, if you are greedy, what you will do, you will end up trading everything, every move. That is, you are trading direction. If you are trading direction, if you are biased, what happens? For example, in this, let's talk in terms of probability. So one down move, second is the up move, third one is a down move. So what is the probability of each trade? So you have a 2/3 probability of a down move and 1/3 probability of a up move. So yesterday, what I mentioned in my channel, I traded only one up move. Even for clients, I gave only up move. Okay, so I gave them a call option both in Bank Nifty and Nifty on an up move because the probability was this was a very clear trade. Okay, you could have traded this also, or you could have traded this also, but these are unexpected trades. At the open, it is very tough to trade the downside, and this was unexpected move because of the book adjustment by traders. So this is how you should think about intraday trading. You should not think like a retailer. A retailer will go with a bias. He says, today I feel the market is long, so I'll take a long trade. Or he will go and says like the market seems down, so I'll take a short trade. That is fine. But you should look at the volatility and trade. You should not look at just the direction. Okay, that is a bro tip. So with that in mind, let's see, let's first discuss what has happened yesterday, and then what will happen today after the open. So yesterday, sellers were controlling the Nifty down. However, after we will look at Bank Nifty as well, they were controlling the Bank Nifty up. Okay, they were kind of selling volatility in Bank Nifty and buying volatility in Nifty. Very, very important. Okay, so that is called volatility arbitrage. So how they do it? There are many ways. We'll not go into it, but I can easily see that. Okay, so so when we came down, what happened is we came exactly near the bump. This is a small distribution, so this was providing kind of support. Yesterday, if you look at my channel, I said I will be negative only if we go below 281, 18 to 81. You can go back to channel and check. So until then, I was not short. I was not worried about a short side move in Nifty or even a Bank Nifty for that matter. And once the setup formed in market profile, so the market went up, hit our target again. My target was not great, so the market again tried to kind of recoup the order flow here. So basically, the reason why it came here, the market came for looking for orders here, so it did not find anything. That's why it fell. Okay, large players for the Fed event, they wanted to kind of get the flow here, but you see that there is in order flow charts it's very clear. So this is called a spike high, which is late during the day. So this is called a spike in terms of market profile. We spiked and then we fell. So today, how do I position today? Today, what I'm going to do, SGX is somewhere above. Yesterday, I mentioned in the channel that we need to check for 18,459. Of course, you might say like, it is a December future and all that blah, so you don't have to worry. However, what SGX indicates is that we are trading somewhere here. So we'll look at daily charts. So today, the movement is going to be somewhere below 460 and above this level, or somewhere above 18,460. However, if the market, will look at the daily charts so that we understand. Just a minute, this seems to be stuck. It seems to be stuck. So this is Bank Nifty, this is Nifty, this is Nifty. Yes. So here we see that the kind of, there is a kind of this is the profile distribution. So we might kind of trade somewhere here in this zone. So this is my zone of expectation. So if we are trading above 459, I expect the market to form a green candle like this. It will be a green candle. Let us put some green color here so that so I am expecting a green candle like this. However, if we are there is another chance of the market forming a green candle somewhere here. Okay, either this or this. I am looking at a possibility or a probability, higher probability of this happening because the volatility has been low and this is a monthly expiry. And also you see that there is a kind of, this is not what I say, a clear one, but I see kind of divergences happening on all time frames, both intraday and positional. So that's why I expect the market to show some positivity during the day. Either we are going to open at 459 and close like this, okay, and or we may do something like this. We should be ready for this. But there is an outside chance of the market going below this level, that is, which is 300, which is 281. Basically, 18281 is the key level you have to remember. So yesterday's low is very, very important. If we break this level, there is a risk of going towards 18148. Remember this levels. 18281 is one level and 18148 is level. And if we break that, then we are going to hit somewhere 18,000 levels. See, basically what I am trying to say, I am trying to create a hypothesis for myself during the market. We do not know what the market will do. What the market will do, we will never know. So depending on how the large players position their positions, the market will form something like this. So these are the three scenarios I am expecting. So this is my first scenario. You can say this is x1, this is the first scenario, and this is x2, because x means we don't know what is happening. So basically this is x3. So I'm attaching a higher probability for x1. So I'm expecting a lot of trading to happen between 459 and 636. So somewhere below we will expire, or we will expire somewhere around 459. Or the second point is we may trade somewhere here between yesterday's high and for 18459, or there is a third outside chance of the market falling a lot because volatility is lower. So generally, to create fear, they kind of the market can form somewhere here. Another reason why the market can form somewhere like that is because of the lower high formation. If this was a lower high, so they are going to take the market down. However, if they do not want this as a lower high, the market will break this high as well, and we will either form a bar here or here. So basically, I am visualizing what the market can do. So, and also we see that on a daily time frame, we have a very nice divergence. So between November, you see that there is a nice divergence. So this divergence is happening even on the intraday time frame. If you look at intraday chart, you can easily find that there is divergence there as well. So that is what is happening in Nifty. Hope you got the levels. So what are the levels? Let's repeat. It is 18 to 81. That is the first level. Or 18148. This is my second level. Or 18459. These are the three levels I should keep in mind. Now, what should option sellers do? Because they are, they are having a great time. So today, if you are an options buyer, entire November until volatility VIX goes above 15, control your risk. I'm not saying that stop trading, but trade only when you have a setup, when you have your setup formation, and lower your expectations. So basically, in low VIX environment, don't use VIX as a technical indicator. So have it as a psychological indicator. What I mean by psychological indicator, when VIX is below 15 or 16, what you do, you lower your expectations. If you are making something like 10K profit, now you are expecting 5K profit. There is nothing wrong in that. There is no ego in that. When the market is calm, you just relax, okay? And only take trades when you have your ranked setups. That means I rank my setups. If I have the setup with rank 1, I take 4 lots or 5 lots or 10 lots, depending on my capital and risk management. So that way, what happens is an option buyer will control risk. Now, what option sellers should do? So for the past, since November, you see that, the volatility has been very benign to them, very good for them. So they need to understand what are the levels or what are the ranges that they should look at. So if I were a seller, so some will short volatility between 1860 and somewhere like, 280 levels or 300 levels. These are the levels where I will sell my volatilities. And I need to make the adjustments. If the market is breaking this level or this level, I'll be making adjustments. If it is moving in this level, it's bale, right? So basically they will be making money today also. So let's see how Nifty will respond today. It's going to be a very interesting expiry, because after so many months we are looking at an expiry with lowest wicks. Okay, so this is going to be very, very interesting. If you are an option seller with kind of decent capital size, you can really make use of these are the ranges I am looking for. So basically, between these two ranges, they can make a lot of money with adjustments to be done at this level or above this level. I think the upside, we do not have any event support to kind of break this, so the upside can be capped here and the downside can be capped here, but there is an outside chance of this. In that case also, this is the level that they should have ready in mind. Okay, otherwise this low wicks environment, they are going to make a lot of money if you are entering in size. Let's look at Bank Nifty. So Bank Nifty has been yesterday. The move in Bank Nifty was also very decent yesterday. This is from yesterday's video. I told you that we need to kind of break this Fibonacci value zone. I call this Fibonacci value zone. So basically, if you are a Bank Nifty trader, you should be selling. You should be trading in this range. And I see for an option buyer, there are more trades in Nifty than Bank Nifty this month. So beware of that. Don't put more size in option buying in Bank Nifty. Okay, so and also it is a kind of inverted hammer formation. So today the open should be somewhere above this and we should cross this level. Remember, at open, if we open above this level and crossing this, there is a fair chance of green bar forming this level. So between 42,859 and 43,252. So there can be a green bar. Let me put, because if you come back to the video during the market, you can check. We can move somewhere around here, or there can be a move somewhere here where, if it is low volatile movement, so somewhere it will an inverted hammer or something, some kind of candle will form here. If we break this level, that is 42,620 or 600, yesterday I told you we should not break that level. If at all we break that level, there is a fair chance of coming until this level or even this level. So look for 42,600. Below this, we'll look for 42,600 to 42,000, below which we will not break, I presume. However, we should be very careful, because this is another value zone where we can visit if the market gets really extreme. Okay, we should be careful about that, because volatility is very low. If volatility shoots up, we can have a big red bar like this. That is also a possibility. So this is my Z1, Z2 and Z3. So depending on these levels, remember these levels, 42,859 on the upside, which is where yesterday many shorts were trapped suddenly. Okay, all their option buy stops or exits were hit immediately, and then the market came down. So this is the kind of trap that option short should be very careful. That means people who are selling volatility should be very careful about. Now, yesterday in Bank Nifty, yes, we went up. I was very bullish. So nothing happened here, but I did not, shift to shorting the market, because the Bank Nifty was pretty strong above this level. So, and then we made a spike high late in the evening. However, you see that Nifty ended below the day low, and Bank Nifty ended above the day high. So this is a kind of confusion that large players have created yesterday. They have managed the options books because of the event. So there is no significance to yesterday's late day move. So let's see today how they're going to adjust right at the open. And we have discussed about today's possibilities. So any move below 430 here, so it's about lower probability. So basically, if we are breaking this range, if you open and break this range, you should be looking for 42 430 and 42 320. These are the two levels that are very, very important. So let's and then we will go towards 42 180. So if at all there is a red bar formation here, if we go below, I will update in the channel. You can have a stay tuned, and you'll be updated as the market is developing. So if you are liking my content, Please like, please share so that you get notifications, and also please share it among people who are interested, because knowledge grows with sharing. There is nothing secret in the markets. How you respond to your knowledge makes money, not your knowledge. Let me tell you, keep it in mind, your knowledge does not make money. How you respond to your knowledge makes money. For example, we all have education, we all have studied engineering, medicine. There are so many people who do MBBS, but how a doctor responds to his education makes him a famous doctor, right? It's not just luck, how you use your skill. That is very important. So in trading also, if you are acquiring some knowledge, that is not making money. What is making money is how you are responding with that knowledge. You have a tool, you have a hammer. Having hammer does not break something. How forcibly you use that hammer will decide how fast you can break something big, right? So knowledge is like that. So don't think like a retail trader that, if I learn a strategy, it is only to me. Entire world knows about that strategy. If not now, after 10 years, it will find out about that strategy. So share your knowledge. Nothing is going to happen. In fact, it will help you if you become a free soul sharing the knowledge. Okay. I'm not saying that if you have a good setup, share it. Setup is your execution, but subject is your knowledge. So never share your setups. Okay, don't share it free of cost, because setup forms with hard work. It is your hard-earned product. Don't share your product, but you can share your knowledge. You can tell someone, learn market profile, or learn candlestick theory, or learn fundamentals, things like that. So be good, be safe, and trade smaller number of positions if you are on the buy side. And if you are a seller, please watch the spike in volatility. The demon can come really out of the woods like this, and you will be punishing yourself. Have a great day. Bye.